Welcome to our deep dive into one of India's most resilient pharmaceutical giants, Zydus Lifesciences. Formerly known as Cadila Healthcare, this Ahmedabad-headquartered powerhouse has evolved from a domestic player into a global innovation-led life sciences company. With the nifty Pharma index showing robust momentum, Zydus stands out as a key contender for any serious investor's portfolio. Today, we are analyzing why this blue-chip stock is making waves in the Dalal Street circles, looking at its strategic shifts from simple generics to complex specialty products and high-value biosimilars. Let's talk numbers, because the bottom line is what matters to the savvy investor. In the recent fiscal cycles, Zydus has shown a commendable trajectory. We are looking at a consolidated revenue that consistently crosses the 17,000 crore mark. What is even more impressive is the EBITDA margin, which reflects strong operational efficiency. The company's focus on the U.S. market and a steady domestic business has ensured that the cash flows remain healthy. This isn't just growth, it's high-quality growth, backed by a solid balance sheet and a prudent approach to debt management. The U.S. market is the litmus test for Indian pharma, and Zydus is passing with flying colors. They have one of the largest ANDA pipelines in the industry, with over 400 filings and counting. But it's not just about volume, it's about value. Zydus is pivoting towards complex generics, injectables, and limited competition products. This strategic shift helps them insulate the business from the standard price erosion seen in oral solids. Their Glev limit and other key launches are expected to be significant contributors to the top line in the coming quarters. While the global story is exciting, the domestic market is Zydus's home turf. They are a top 5 player in several therapeutic segments like cardiology, nephrology, and oncology. But what many investors overlook is their consumer wellness arm. Brands like Complan, Glucon-D, and Nycil are household names across India. This segment provides a stable, high-margin cushion that is less volatile than the prescription business. The integration of the Heinz India portfolio has been a masterstroke, giving them a massive distribution reach from the smallest kirana stores to the biggest supermarkets. If you want to understand the long-term value of Zydus, look at their R&D lab. They are one of the few Indian companies that have successfully developed an original new chemical entity, or NCE. Saroglitazar, used for treating NASH and PBC, is a potential blockbuster drug that is undergoing clinical trials globally. Their investments in biosimilars are also paying off, with a portfolio that targets massive global markets. This transition from a copycat generic maker to an innovation-led player is what justifies a premium valuation in the eyes of institutional investors. Now, let's look at the charts. Zydus Lifesciences has been a consistent outperformer. Over the last year, the share price has seen significant appreciation, rewarding long-term shareholders. Currently, the stock trades at a reasonable price-to-earnings multiple compared to its peers, like Sun Pharma or Dr. Reddy's. Analysts are particularly bullish due to the company's net cash position and their aggressive share buyback programs, which signal management's confidence in the company's intrinsic value. It's a classic compounder stock for a diversified Indian equity portfolio. No investment analysis is complete without a reality check. The pharma sector is fraught with regulatory hurdles. USFDA inspections are the biggest swing factor. Any warning letter or import alert for their manufacturing plants can impact the share price overnight. Furthermore, the rising cost of raw materials, the APIs, and intense price competition in the U.S. generics market remain constant headwinds. Investors must also keep an eye on the currency fluctuations between the rupee and the dollar, as it directly affects the export realizations. To wrap it up, Zydus Lifesciences is a company in transformation. It is moving up the value chain from simple pills to complex science. With a strong domestic presence, a focused U.S. strategy, and a promising R&D pipeline, it offers a balanced risk-reward profile. For those looking to bet on the India Pharma 2.0 story, Zydus remains a top-tier pick. As always, consult your financial advisor before making any moves, but keep Zydus on your watch list as it navigates its way toward becoming a global specialty pharma leader. Thank you for watching.